Namaskar and a very good morning. Welcome to the audio cast from Kotak Securities. I'm your host and guide, Anindya Banerjee. The Fed fear is still driving the markets. US equity markets were down on Friday and Asian equities are down. The recession fears, Fed tightening and global central banks tightening, creating some kind of a financial and economic accident. The fear is so high that it is driving equity markets. Lower dollar index higher, US bond yields higher. US 10-year is close to 4%. Now, dollar index in the morning is not having much of an impact. 82, 36, 37 ke aaspaas hai spot, which is going to be a flat open. Now, it looks like that 82, 60, 70 is going to be a very hard cap on the dollar rupee. It will be difficult for dollar rupee to cross that because we have seen very heavy interventions from the RBI closer to those levels, which means 82, 70 at max 83. Over the next few weeks could be a cap on the USDINR. Niche mein 82 has become a support. If that breaks, then we could look at a move down to 81.5. But as of now, 82 is the support, 82.70 is the upper cap on spot in USDINR. Now, how to play this kind of a market? One thing is clear: avoid taking unhedged trades overnight. Which means if you are doing a short straddle, convert it into an iron fly or a butterfly. If you are doing a short call or a short put, then convert that into a hedge. So, for example, if you are selling an 82.75 call or an 83 call, you buy a slide out of money call as well. So, in a worst case situation, you are not caught with an unhedged trade. Similarly, for bet on the direction instead of futures overnight, it's better to use call spreads or put spreads. So hedge trades are advisable. Our view with the dollar rupee is going to be ranged with an upper cap at 82.70 on the spot, 60.70 on the spot. 82 is the support. If that breaks closer to 81.5 is the support level. Globally, as I said, the fear of a recession and central bank hiking too much is there. But there is a silver lining, something which we'll be talking in details in the coming weeks and months, is that it seems like unless the commodity prices flare up, and also our expectation is that the services inflation is going to start coming down in America. So which means from next year onwards, early next year, Jan to March ke aspas se, we could see a sharp decline in the US inflation, which means the expectation that the Fed will hike closer to 5% by early next year seems to be the peak in the US Fed funds rate. So closer to end of this year, we will see the market expectation or market focus move away from Fed towards just the Ukraine and Russia war. And if there is a deal in the winter, again, that's something which has a lot of dimensions. Agar wahan pe deal hota hai, we could see a major turnaround in the risk asset and the dollar index. So something to keep in mind, and something we'll be discussing in detail in the coming weeks and months. Our expectation is that unless commodity prices rise, we are close to an inflation peak in America, and we could see a sharp decline in the inflation from first quarter of next year. Not immediately, but first quarter of next year. And that could be a sign of a pause in the Fed fund rate, and that can have a major impact on the global risk assets and the dollar index. That's something, again, is a medium to long-term bet. Now, coming to the crosses, Euro INR, GBP should see some kind of recovery today. Overall, it's going to be a range-bound week for these currencies. Yen INR is going to be in focus because ho sakta hai ki Bank of Japan may once again come and intervene in the market. So that's it, folks. This is Anindya Banerjee signing off. A fantastic day.